Okay, so in this training video we're going to be looking at the property strategy of trading deals. Now this is probably one of my favourite strategies when it comes to generating cash flow in property. Now holding property over the long term is great for building assets, security, a pension and a good steady long-term income, but for short-term cash flow with low startup costs it's hard to beat this as a strategy really. The property trading or the deal strategy is one of the best kind of cash flow ones. Now it's a progression really from trading leads that we've discussed in an earlier video, but depending on your personality, your skills and the time you have available as well, it could also be a much better option for you in terms of potential and the potential income that you can get from it. So what is a property deal? Well, a property deal would consist of a pre-negotiated offer with a vendor, so a homeowner or a property seller, who has signed an agreement or an option to sell the property at a negotiated price. So this means you could sell a deal as it is, and the buyer would do their own sales chasing, they'd liaise back and forth with the seller and instruct their own power team of solicitors or mortgage brokers or letting agents, or you can be a bit more involved and charge a premium, and then you can sell it as a fully packaged deal where you're doing the sales chasing and it's all part of the service and you help the buyer go all the way through to completion. So there's different elements of what you can offer within the deal, but typically you're sourcing a property for another investor and charging a fee for it. Now there's a couple of things to consider when you're doing this, and recently there's been a spotlight on this particular strategy with a lot of large scale companies being in the media for forcing sales through with homeowners and sellers on unfair terms really. Now this has meant that the process and legislation around this particular practice has come under a bit more scrutiny recently, and the Office of Fair Trading and the Property Ombudsman have got involved and they've issued guidelines on what property sourcing businesses should adhere to depending on how they're set up and how their business operates. So where in the past it may have been considered okay to just simply be a middleman and source these deals for other investors and just kind of sit there, as I said, in the middle really. Now depending on the level of role that you take now, for example, if you were to sell it on as a deal without you being either the buyer or the seller, then you may come under the requirements and the guidelines of the Estate Agency Act. So a lot of property sources and individuals or companies that sell deals may fall under this requirement, but it's not as simple and black and white as just saying you definitely will. It's a case of having a look at the requirements of the Estate Agency Act and simply seeing if they apply for you and the way in which you intend to operate your sourcing business. So there's a link here that you can go on to see what's involved in that act. So that's from the Office of Fair Trading, and I'll put the link under this video in the comment section as well. Now if this is the case and you do fall under the veil of the Estate Agency Act, then there's a couple of requirements that you will need to fulfill in order to operate this strategy kind of properly really on a long-term basis. And it's certainly worth kind of looking at. You want to set up your systems right in the beginning so you don't have any problems in the future and that you can build and develop it as a true business on its own merits. So with this in mind, there's 4 key areas that I'd recommend you to have a look at, and the first is to consider becoming a member of the Property Ombudsman scheme. So again, here's a link to their website, and we'll put just here, and we'll put another one or the link again in the comment section as I mentioned on the video. The second element to consider is to register with the Office of Fair Trading for anti-money laundering. So depending on how you structure your deals and where your investors are coming from, again it's something you might need to consider, so that's worth a look at. The third thing is to register with the Information Commissioner's Office. Now this is to do with data protection, and if you're holding information or personal information about individuals, so that could be the homeowners that you're buying the properties from or the investors, then you may need to fulfill these requirements of the Data Protection Act. So again it's worth kind of looking at that. And then the fourth one is property insurance, so indemnity insurance, making sure that you have some form of backup really in case anything goes wrong. And the requirements of the indemnity insurance for the Property Ombudsman scheme, again you can kind of see on their website, or you can call them up and see what their requirements are. Now all of these might sound quite onerous and may put some people off actually getting involved in property trading. I don't want it to, because it's a fantastic industry. It's a great kind of way to earn an income from property without having to buy the properties yourselves and requiring for those large deposits. And the requirements here aren't really that onerous in terms of time to set up and the cost to do it either. It's a couple of £100 a year for the Property Ombudsman scheme. The Commissioner's office is about £35, I think, currently to register. The requirements of the anti-money laundering scheme, again, it's just a case of having a chat with them and seeing what their kind of guidelines are depending on how you're set up. And the indemnity insurance, again, is not kind of too expensive depending on how you're setting it up in terms of what your turnover is and how much kind of policy cover you need. So it's certainly worth having a look at. But it's important to understand where the money is in terms of in these particular deals. So to give you a bit of an example, the property trading strategy for leads is quite a quick turnaround. So you'd buy a lead and then you'd sell it on and you'd have your money quite quickly from doing that transactional trade. Whereas property trading is a little bit different because you typically won't get paid until the actual property exchanges or completes. Now, many deals are actually sold for around sort of £2,000 to £5,000 per deal. So one deal can comfortably replace the earned income of most people's 9 to 5 jobs. So it's certainly worth waiting till the property completes. It's, as I said, it's a higher generating income than simply trading leads. So it's certainly worth weighing up and seeing if it works for you in terms of what your skill set is. But it's important to note that as a one-man band, it can be hard sometimes just focusing on a small area and continually selling quality deals in that area to try and scale up and to do volume. But that's not necessarily a problem, because even if you're just doing one deal a month, as I said, you can quite easily earn between sort of £2,000 to £5,000 per deal before costs. And if you have the skills to find the right types of deals, then you should comfortably be able to manage a pipeline or a sales pipeline of around one a week. In terms of from a time perspective, it's not going to take you a great deal of time once you've sourced that properties to actually set up the systems to get things up and running. One deal a week should certainly be a comfortable target to aim for. And as you can see the figures there, it's going to give you a fantastic income as well. But in terms of trying to scale that up to do volume and to try and meet that target of if you wanted to do between sort of one deal a month to one deal a week, then certainly by opening up your areas, it can give you a little bit of a kind of wider market to aim at. Now let's look at this from the perspective of whose situation is it best for, really. And I'd probably recommend, if you're cash poor and time rich, that this is probably a good strategy for you. It's one of the strategies that I started off earlier on. It's, as I said, it's a fantastic strategy because once you've got a few deals kind of up and running, you can streamline it, you can put systems in place. It's just really that little bit of time to kind of get it up and running in the first place, really. So that's why it might be something more suitable to somebody that's time rich, that's got a little bit of flexibility with how much time and effort they can put into to this particular strategy. Now once you get involved in it, the first couple of deals that you're going to do will be the hardest. This is where you're going to learn kind of the pitfalls, and this is where you're going to be able to just kind of get to grips and understand the different areas and where a deal might fall down and kind of how you can prevent it, really. Now you could read all the books you wanted until you're kind of blue in the face and do training courses and things like that on this, but this is the same as any of the strategies. You have to take action, you have to get involved and get out there and do it and try and learn your experience from being on the ground and in the doing, really, as opposed to just simply learning. And research and training is still going to be valuable for you. It'll still help to prepare you and certainly reduce your mistakes. And it's a combination. It's a step-by-step process of actually learning what needs to be done and then going out there and doing the work, not simply leaving books on your shelf or just doing the training course and then kind of putting it to one side. You do have to take action on this. And we'll cover how to find the deals, how to value the properties, and then even all the way on how to actually sales chase during this training course. So it'll give you everything you need to get out there and actually implement it. And it's all part of the mix that comes together to kind of get you to a stage of earning a good income in property, really. And we're not going to leave anything out. We'll cover everything. So at the end of the training, you'll be confident and know how to actually find these types of deals and to start earning money off them within quite a short time frame, if this is your chosen strategy. So now let's consider and look at some of the different assets, really, that are required or that would help you if this is the strategy that you're setting out for. So typically, some experience with marketing is going to be a great help. This will help you when you actually come to generate the leads. So whether you decide to do leaflet drops or newspaper adverts or even internet marketing, and we'll discuss the different options and the different ways you can kind of do these different strategies, and we'll teach you how to do them as well. But if you have some previous experience in that, then that's going to help you. The second one is telephone skills. So if you're going to be going through the process of actually negotiating these deals with sellers and trying to get them agreed and negotiating them either over the phone or preferably kind of in person, then the initial kind of process certainly starts over the phone. And by having a good personality, by having good telephone skills and being just approachable really, is really going to help you convert many more deals in the long run. And then the third is negotiation skills. So you don't have to become kind of a slick salesman or anything like that, but simply just being, again, touching on what we said earlier, kind of approachable and just being able to relate to the people that you're speaking to will certainly help you with this strategy. The fourth one is being good at admin. So it helps to be a little bit OCD with the way in which you approach certain aspects of this in terms of your paperwork, keeping kind of a timeline and a system in place of when you chase up leads and kind of which ones you need to follow up on and things like that. But also for when it comes to sales chasing the deals, getting them through from not just the negotiation stage, but all the way through the sales stage through to completion as well. Being good at admin is certainly going to help that. And then lastly, some available time. So by having the time to consistently find these types of deals, going out to meet investors, going out to meet vendors, and just getting on the ground really and doing the work is certainly going to help you. So these are some of the main assets that are going to help with this strategy really. Now in terms of timeline, when it comes to I suppose a process of how long it takes to go from kind of scratch to getting your first deal up and running, we typically say around sort of 2 to 5 months, and that's conservative because it's certainly not as quick as just selling on leads, but the rewards are more than worth it. The first month we'd usually say is to set up your systems and to get the process of sourcing the leads kind of in place. The second month and also part of the first month is usually with negotiating with vendors and then finding a suitable investor as well to buy the deal. And then the next couple of months really is to actually get the deal to go through and go through the normal kind of sales cycle. And if the buyer's maybe buying with mortgage or cash, then that can kind of change the timeline somewhat. But that gives you kind of a rough idea. Now in terms of how this works from an example point of view, let's say you're to spend your time on the majority of the marketing doing it yourself. So you spend in terms of cost is reduced when it comes to actually implementing the marketing. So you'd probably put a budget towards maybe buying leaflets or marketing the website or putting in a newspaper advert, but you'd do the effort to try and get them up and running or deliver those leaflets or set up the website. Then let's say in this example that you kind of starting off, you're converting one in say 25 leads. Now this is again is very cautious. It's overkill because the industry standard for these types of things typically is around kind of 1 to 10 leads for a lot of investors that I know. So this is super cautious when you're kind of starting out, but it's just a good ballpark. And then let's say you can generate the leads at say £10 per lead. And this is the same cost per lead that we mentioned in the lead sourcing and lead selling kind of examples. So it costs you, let's say, £250 to generate these leads to get to this kind of target. And again, you can look at worst case scenarios. You could double this lead cost and call it £20 if you wanted to, but the margins, as you'll see in a second, are still going to be there. Now, before you look into the figures in detail, it's important to understand that not all deals are going to actually complete. So even when you do agree a deal, not always will they go through to completion and you'll get paid on that particular or that effort. So the industry average through most estate agents is typically around 1 in 3 deals will fall through. Now, as an investor, where you're not reliant on long-term kind of change, or when you're dealing with investors that are maybe buying with cash, or even if they're using buy-to-let mortgages, they're not necessarily new to the market. So they're unlike, well, they're certainly not going to be first-time buyers, but they're not going to be using first-time buyer mortgages as well, and they're not going to be involved in long chains, as I said. So there's less chances for the deals to kind of fall over. But even if you said sort of a worst-case scenario of around sort of a higher rate than maybe the estate agents typically get, so let's say 1 in 2 deals, and this is, as I said, worst-case kind of figures, so we can be conservative in the plans. then you're going to need sort of 2 deals to go through for every one to complete, or 2 deals to be agreed for every one to complete. So that's going to cost you around sort of £500 in marketing costs, as well as obviously your own time in terms of actually finding those leads, negotiating them, and getting them through to the stage of kind of completion. But the payoff on this, remember, oops, sorry about that. Yeah, but the payoff on this, remember, is going to be sort of £2,000 to £5,000 per deal. So it's well worth kind of the time and effort to achieve this. And even if you got a lower income from this and you only got kind of £2,000 per deal, the profit margin on that is still going to be sort of £1,500 in terms of a net income. So for what's probably taken you a few days worth of work spread out over a month, isn't a bad start to certainly get you up and running and to start generating an income from property sourcing. Now once you've done the first few deals, you can streamline the sourcing process. You can outsource a lot of the work as well, so most of the time consuming parts like delivering the leaflets or creating websites or setting up kind of campaigns, and simply focus on the most important aspects like negotiating and actually dealing with the vendors and the homeowners and getting those deals agreed. And then you can easily scale this up. You can cover wider areas, and then you can make thousands per month simply on trading deals alone. You don't have to build up a portfolio. You don't have to have large deposits to start getting involved in property, and you certainly don't have to worry about dealing with leaking taps or moaning tenants or anything like that. It's simply trading really the property deals as they come along. And as we said, it's a great income stream. But there are obviously pitfalls again to kind of look out for, really, and there's a few things that I'm going to touch on here on a few case studies on how to do it right and how not to do it. So some areas of property trading where I've kind of made mistakes when I first got started, that hopefully you can take away and use and make sure you don't make those same mistakes and you can utilize those in your own efforts. So when I first started in property sourcing, all the way through to kind of today, I've noticed a couple of kind of key areas really that make it kind of successful. But typically there's two main parts to becoming a property trader or selling deals on, and that's dealing with and finding motivated sellers, but then also finding the investors. Now when I first started out, I only focused on this first kind of key part really. I'd become quite good at finding how to, well, source in motivated kind of sellers and properties, and I was getting regular leads coming through. The phone was ringing off the hook because of a couple of campaigns that we had running, and it was great. But the one thing I didn't have was a steady stream of investors actually able to buy those buyers when we were sourcing them. So typically very early on, when I started, I looked to kind of rectify this so that I wasn't having a lot of wastage, and I started to work with a company that they would act as a broker. So they would typically sit again in the middle between myself and the investor, and they were kind of taking their cut of around 50% of the deal. So they had quite a large database of investors, and they'd control the sales process as well. So I'd just be doing the sourcing side of it, and they'd be handling the kind of the side with the investors. But they were charging around £4,000 to £6,000 for their deals, so I was still walking away with about £2,000 to £3,000 my end in terms of the commission, and this was great. It worked really well. Did a few deals like this over a period of time, and everything was very good. But what I kind of realised that it was quite a mistake just focusing quite heavily on one investor. I kind of took a lot of my focus into just concentrating on finding the deals, and thought if I could kind of get that ball rolling and get the leads coming in and converting the deals, and then they'd always be able to sell them. And this was where it kind of went wrong. I didn't have a backup plan. And then when mortgages changed in about 2008, the situation changed quite dramatically, in as much as the broker was then struggling to sell on the deals because they weren't focusing on a lot of cash rich investors. A lot of their investors were relying heavily on mortgages, and as mortgage rates were changing, as surveyors were down valuing properties quite regularly, a lot of the deals were falling out of bed and fell through the cracks. And this meant, unfortunately, I was unable to complete on a lot of deals, which had obviously a massive knock-on effect for me, but also for the vendors as well that were looking to kind of sell their homes that we kind of discussed and agreed prices on. Now there's a couple of deals also in my pipeline of sales, if it were, that were due to completion, but because the buyers were pulling out, these were unfortunately had to or couldn't do anything on them. These fell through, and we were unable to complete on them. So as well as unfortunately letting people down, I also had to kind of stomach the the marketing costs that were involved in it, because we'd already spent the time and the effort and the cost to find those leads and convert them into deals, but then they hadn't kind of gone through. Now, some of the deals we did manage to rescue and find some new buyers, but others unfortunately just didn't complete, and the vendors ended up going back on the market with estate agents. And this was a massive learning curve for me in the early days, because I realised that it's no good simply having just one part of the equation that's looked after in terms of being able to find the deals. That's great, but you also need to have the other side covered, where you've got a plan B on how to find investors, so that you've got really a backup there, so you're not just relying on one company or one broker. So there's a couple of things that I'd probably do differently, and that I do differently now with the business, in terms of how I not only, I suppose, systemize and run the process of finding the deals, but also how I find and work with investors, so that we do have a plan, kind of A, B and C really, when it comes to both finding the deals and also finding a buyer for them. So there's very little wastage. If there is a problem with kind of properties market that's out of our control, with mortgages and things like that, then we've got a backup, because we work quite regularly with cash investors as well. So the three things that I'd probably say to take away with this is, don't rely simply on brokers. They're certainly a good option, and if you're doing a lot of deals, it's a great way to set up a network to actually sell those deals. But by being heavily involved in them, you're quite exposed. So it's best to have your own network of investors, give you more options, and you'll certainly have less deals falling down. Also, I'd say it's best to work with investors who can move quickly. So you want to ideally, in a perfect world, work with cash investors. These are going to be great because they can complete quickly on deals. They're not reliant on mortgages, so they're not going to be as affected if there's any changes in the mortgage market. And then thirdly, try and meet local investors. So investors already know the area and understand the market, and they know what makes a great deal as well. So you're not having to kind of resell every single property to a new investor. Often you'll have a couple of local investors that are buying regularly in the area. They'll take the majority of your stock and the majority of the properties, and this again allows you to kind of focus on the aspects of kind of being good at sourcing the properties, as well as having somebody that's able to complete on the other end, and having an investor that's ready to go, and somebody that's locally to yourself or to the property is going to know a lot more about it. And it also helps you to kind of source a bigger pool of investors. So go along to networking events, go along to your property events, look at social media, and find kind of where those investors are hanging out, so you can you've got an exit. Okay, and then next we're going to look at really a case study on how to or how it can go right for you. So when I first kind of started, I realized relatively early on that cutting out deals that may fall through is critical in being a successful property trader, and certainly operating this strategy to its fullest potential. So it's important not only to find the right property, but to negotiate a good price. You don't want to oversell the deal. You don't want to kind of over-egg the estimations or the market values. You've got to be straight with the vendors and the investors straight from the start. So having a good relationship with the vendor and the investor buyer is going to help a lot more deals complete for you. Now recently, I've turned the traditional way of kind of property sourcing around a little bit, and most deals in this market are sourced first. Then an investor is kind of found who may be interested in the deal, and it's a case of first come first served. A lot of companies send out email lists, and I wanted to kind of go a different way to that, to reduce the potentials for fall throughs, to get more deals going through, and to have better quality as well. So when you're operating your kind of system like this, is the downside is that you may not find a suitable investor. So if you're sourcing the deal first and you don't have an investor ready to go, then you're not always going to be able to complete quickly, and you might not be able to find an investor that ticks all the boxes for you or for the seller. So in 2012 is when I actually changed the process in which we did this, and we started to use something called tailored property sourcing, and now that's what we do as our main method for sourcing kind of any property investment really. Now this is a more hands-on and time-intensive process, but certainly for me it works much better. What it involves really is meeting the investor first, so you're putting them before you're finding kind of the deal. You meet them, understand exactly what it is they're looking for, and then put a proposal together based on what the requirements are of their kind of needs and the types of properties that you think are going to kind of best fit their criteria based on your experience and the types of deals that you can do. And then you go out and start sourcing based on their individual requirements, so it's tailored to what they're looking for. Now, I tend to only work with a smaller group of investors on this process because it's quite time intensive. It takes a long time to kind of build up those relationships and find individual properties specific to requirements, but you build up stronger and longer term relationships this way as well. And instead of just simply sourcing one property for maybe one investor, it's a much more tailored service, and it's portfolio building really. So you're going to be working with a smaller group of investors long term as opposed to a larger group of investors on just one-off occasions. Now, if I ever needed to, I could always go back to the traditional kind of sourcing method in terms of if we generated a lead that didn't fit a investor that we're working with at the time, we can then go to the market and find an investor that might be interested in it, or it might fit their criteria. But typically the best deals and relationships I've found now have all been built with the tailored property sourcing that we do. And the other noticeable benefit as well is there's less fall throughs with this, because the investors give us a criteria of exactly what they're looking for from the start. So when we do get a lead in and when we do negotiate a deal, the vendors aren't going to be upset a couple of weeks down the line because we haven't found a buyer. We've already got a buyer kind of lined up. So this is kind of a perfect match really. It's a bit of a win-win situation. It's just a little bit more time consuming and effort involved in the front end, but hopefully you can see there from kind of the introduction to property trading and using this as a strategy that it is a fantastic cash flow strategy. It's great to build up a property business without having the requirements of deposits to buy your own portfolio if you were just looking as an income kind of stream. And in the next couple of topics we're going to be looking at how to actually find those deals, how to negotiate them, and the other kind of things that go involved in the process. So hopefully you found that video helpful, and I look forward to catching up with you on the next topic.